When will real estate inventory increase? I mean, everyone wants to know. Well, glad you found me because I'm about to tell you. You ready? Let's go. So by the time we're done here, you're gonna know when real estate inventory will hit its next peak, when it's likely to rebound, and what there is for a home buyer to do about it. Oh, and by the way, if you're still looking to get that first deal under your belt, I put together a free training just for you to help you get that first one done. And then I'll show you how to earn $5,000 a month flipping contracts and properties, working in as little as 1 hour a day. And you can access it all for free at mattsfreetraining.com. The serious lack of homes for sale over the last 18 months has made house hunting in 2022 quite a challenge. The challenge being, once you find a listing that meets your needs, your offer gets buried under a pile of competitive bids. And when you have more buyers than houses available, that's exactly what you should expect. It's how the concept of supply and demand works in a free market. And it's this basic understanding that's needed to navigate the housing market today. Now, there are signs that buyer demand could start to wane, and that would typically mean that inventory supply should start to grow. Now, the first thing that should contribute to more homes on the market is that traditionally, spring is the home buying season where competition is high, and then it tends to slow down by the end of summer, producing a recovery of housing inventory. The recent increase in mortgage rates could help bring back this typical seasonality, not to mention how the market returned to this seasonal trend in 2021. Another sign that inventory should increase in the second half of 2022 is what was revealed in a recent Realtor.com report. It stated that approximately 64% of prospective home sellers plan to list their properties by the end of August. Now, this is some good news for buyers. And some even better news, a 43% share of those selling have expected prices below $350,000, the range most first-time home buyers target. And 22% anticipate listing prices between $350,000 and $500,000. Because of this, come late summer and early fall, there should be a bump in listings for buyers to look forward to. We should hit a peak during this period. But that peak, it's relative. You see, with good news also comes perspective. Although inventory is expected to increase, the forecast doesn't have that increase exceeding 1% this year. Considering we're coming off all-time lows in inventory, it might be premature to celebrate. However, something is better than nothing. Forces pushing against rising inventory are rising mortgage rates. As the rising rates may push some buyers out of the market, it can also push sellers out. And here's what I mean. The meteoric rise in mortgage rates can work both for and against increasing inventory. Some otherwise would-be sellers could decide to just stay put if they find the new interest rates cause them to lower their price too much due to buyer affordability. It's very possible that sellers decide to just stay. You know, we haven't seen anything like this very rapid increase in rates in the last 20 years. And it's totally disrupting people's plans to both sell and buy. Fundamentally, we need more homes, and we just can't rely on existing homeowners turning over, because when they sell, they put their home on the market and contribute to supply, but they buy again and then contribute to demand. The real source to increase supply would come from new construction, and that's a significant contributor to the fiasco that we're in. See, the question isn't really, when are people going to start selling their homes to increase the inventory, but rather, when are builders going to start building to increase the inventory? Because here's the reality. The Great Recession and the glut of housing supply that followed ushered in a decade of underbuilding that has now caught up to us. At the end of 2021, the US was 5.8 million single-family homes short. It essentially means we're 5 years behind when it comes to new construction. So not only do we have to get back to normal building levels, but we have to exceed them to make up for the deficit. Further, each generation is bigger than the previous. So while we need to make up for lost time in the building department, we need to pick up the pace even more to keep up with the population growth. Although builders are firing on all cylinders to complete houses, they are dealing with supply chain issues that are causing the construction process to take longer than usual. Fixing these bottlenecks would help, but even then builders would have years worth of work ahead of them to meet the demand for new houses. Loosening up restrictive zoning laws could pay huge dividends here, allowing ADUs, these are accessory dwelling units, and in-law suites in single-family neighborhoods, and permitting missing middle options such as duplex and triplex units could meaningfully increase housing supply if broadly implemented. In order for builders to catch up even within just a few years, there's massive amounts of red tape to be removed in order to make it easier and faster to build. Much of it is controlled at the local level, meaning local communities need an attitude adjustment from being protectionary in housing to being pro-housing and pro-growth. Because there's a significant portion of the population that is pro-growth as long as it's not in my backyard. And that contradicting community sentiment slows builders down. And it could be that sentiment that's causing the recent home builder sentiment to slip for the fourth month in a row in April, actually, along with rising construction costs, home prices, interest rates, and supply chain woes continuing to take their toll. The National Association of Home Builders, Wells Fargo's Housing Market Index, recently released, showed that builder confidence fell to 77 this month, down 2 points from March. And it's the lowest reading on the index since it hit 76 in September. A score of more than 50 shows more builders view the conditions as good versus poor. So builders are still showing confidence, and they are still building. But for the last 4 months in a row, that confidence is slipping. As construction costs and interest rates continue to rise, I wouldn't be surprised to see builder confidence slip even further. The market will eventually get back to a balance. It's just not going to happen overnight. We need to build more, much more. And given where housing starts and permits are, I wouldn't expect that housing production to fill in the gap for at least another 2 years. You can almost guarantee it to be a slog to increase the housing inventory and bring overall balance back to the market. As recent history has been anything but normal, 2022 should start heading in that direction. But returning to normal by 2023, that's wishful thinking. Now that you know that getting back to a balanced market, that's a long way off, if you'd like to at least know when the hysteria should cool down and what there is to do about it in between now and then when it comes to buying a house in 2022, let me know by clicking the like button. And if you take your real estate investing seriously, make sure that you're subscribed to the channel, as this is what we talk about here each and every week. Alrighty, so if we're not expected to return to normal for quite a while, when will this hysteria cool at least? Well, according to a panel of housing market experts polled in the latest Zillow Home Price Expectations Survey, the housing market is expected to return to pre-pandemic 2019 norms, at least in terms of inventory and the share of purchases made by first-time homebuyers by 2024. Inventory should return to a monthly average of 1.5 million units or higher in 2024, according to the largest group, 38% of the respondents to this Zillow survey. But many are more optimistic. The second largest group, 36%, believes supply will bounce back to pre-pandemic levels in 2023, while 2025 earned the third highest share of votes with 12%. Inventory and mortgage rates will determine how far and how fast home prices will rise this year and beyond. Indeed, new listings are returning to the market, albeit slowly. The other side of the equation is buyer demand, specifically first-time home buyer demand. You know, the last couple of years of record-breaking price growth has pushed many of them out of the market. First-time homebuyer purchases dropped from 45% in 2019 all the way down to 37% in 2021. According to the majority of experts polled in this Zillow survey, first-time homebuyers should regain their pre-pandemic share of the market in a couple of years. However, 18% of the experts polled did not believe the share of first-time buyers will rise above 45% until after 2030, despite millennials, the largest U.S. generation ever, aging well into their prime home buying years before that time. And then there are inflation considerations, as it is currently eroding the bottom lines of American households, with the rising costs for energy, housing, and food as prime factors, driving it to a 4-decade high. Of the 6 categories considered, survey participants expect energy prices to increase the most over the course of 2022, followed by house prices, residential rents, and food costs. Employee wages and stock prices were ranked 5th and 6th respectively, rounding out that list. So what does that mean for demand? Well, against the backdrop of tightening Fed policy and increasing mortgage rates, the significant inventory shortages are likely too strong for the market to see prices pull back. If prices increase this year for homes, rents, energy, and food, and each exceed wage growth, as the panel expects, home affordability challenges will intensify further, especially for low and moderate income renters, making the market even more desirable for your buy and hold investors. But if you're in the market still to buy a house sooner rather than later, there are some things to consider that could result in a satisfied purchase for yourself. There's no getting around the fact that higher costs, whether due to inflation, interest rates, or building materials, are going to make home purchasing more challenging. Buyers can call on some creativity and flexibility, like looking further out in the suburbs, or maybe consider smaller houses or less expensive metros than they might have before. Consider your timing as well, as buyers tend to try to complete their home purchases in the summer, with August as the end of that bulk moving season. So the best time for buyers is normally in the fall because sellers who list then usually are a little more willing to negotiate, traditionally speaking. But with that said, I wouldn't necessarily put home search plans on pause. Keep your eyes and ears open. And if you find a home that fits your checklist and is within your budget, put your best offer forward. The market is indeed changing. So I'm not suggesting to be reckless with your offer. You definitely want to be cautious about overbidding and thinking there's more competition than there really is. It's going to take some time for the housing market to really feel different. So pay attention to how many people are actually bidding on homes. Meaning, if you're in a bidding war against one person, your strategy would be a little bit different than if you're in a bidding war against a dozen people. The market is certainly showing signs of shifting from very, very, very hot to very hot. And later in the year, likely fading a little bit further to just hot, but hot nonetheless. So stay on top of your local housing market. With all that being the case, if you're not already ready, get prepared and stay prepared to move fast. Meaning with mortgage rates expected to rise throughout the year, the amount of loan you qualify for will likely fall. So stay engaged with your lender so you're clear about the price point you're shopping for. Do this, and if the right property shows up, you'll be ready. And if you happen to be in the market for income properties that cash flow, where everything is done for you, I have some free information for you. Download an investor's package at cashflowsavvy.com. And if you like what you see, you'll have the opportunity to pick a time for us to hop on the phone and strategize your passive income retirement. And it all starts at cashflowsavvy.com. That's it for now. Thanks for watching. Take care. I'll see you next time.